Hey, this is Chris, and in this video I'm going to be talking about how to buy and how to pick stocks on the ASX. Now, my background is I started investing into shares on the ASX back in the late 1990s when I was a kid. It was very different back then. Most of the research I did was through newspapers or getting faxes from my stockbroker. So the world's really changed in terms of how people can research stocks. But in this video I'm going to focus on the two main ways that people research stocks to buy on the ASX. The first one is what I would call bottom-up analysis. Now, this is probably the one you've heard of most. It's probably the one that's most discussed. Bottom-up analysis is about understanding the fundamentals of the businesses that are listed on the stock market. It's the Buffett way of investing, really understanding how the businesses operate, their margins, their competitive edge. Most fund managers in Australia that call themselves value fund managers like to say that they're really good at this bottom-up analysis. You need to understand all of their financials of the businesses, the competitive environment, and that ultimately helps you determine whether they're good investments. One of the problems with this sort of bottom-up analysis is that even if you get your bottom-up analysis right, and I should say that's already very hard because there's thousands of people doing it, and it's very hard to have edge that is something that you've discovered that none of all of these other people have discovered when looking at company cash flow statements and profit and loss statements and doing competitive analyses. But the problem is that even if you get all of that right, the macro environment could not be suitable for this company. And this is something that we've seen a lot since the financial crisis in 2009. The bigger drivers of shares aren't often their fundamentals, but it's the macro environment or the overall environment that they're operating within. Which brings me to the other way to pick stocks, which is not by looking at the fundamentals of the businesses, but actually understanding the macro environment of the world. And that's things such as interest rates, such as fiscal policy and monetary policy of governments, inflation, employment, trends in technology, getting a handle of all of these big trends, and then ultimately using your insider knowledge there to determine what sectors or companies you should be investing in. And this is known as top-down investing or macro investing. It's a lot less common in Australia, but ultimately I think probably the best investors in Australia are these macro investors that get it right because it's the thematics that really drive returns, especially in a world of zero interest rates, and because it's very difficult doing bottom-up analysis these days. So when I was a professional trader, my strategy really was to try and marry up both the bottom-up analysis and the top-down analysis to work out what stocks to buy. But that takes a hell of a lot of work. You really need to understand a lot of different things, and you need a lot of different experience to be able to work it out and work out what's really driving the companies. Is it the macro environment that's driving them, or is it the bottom-up fundamentals of the business driving them, or is it a combination of the both? Ultimately, there are thousands of people trying to do this these days, and so what I discovered was that for most people, trying to do bottom-up or top-down analysis is really pointless because what you can do is benefit from all of the other research everyone else has been doing and just buy the index. The index is basically the amalgamation of everyone's views in the market that you get to piggyback on for free. And it gives you the most efficient way of investing, and it gives you all of the views of everyone's top-down and bottom-up analysis at a very low cost. So these days, I think it's a waste of time for 99% of the population to be doing any sort of bottom-up or top-down analysis. Let the professionals go out and battle away to do that for you, and then you can basically freeload off all their hard work by simply buying an index fund that gives you the benefit of all of their knowledge at a much lower cost. And that's why these days I don't think you really need to pick stocks, but if you do, you need to get bloody good at bottom-up or top-down analysis and get some consistent edge over others, and expect that to take at least 10,000 hours of research into a very specific area.